I have your note here. It's called Outrageous Predictions. And one of the first ones you talk about is Amazon buys Cyprus. Please explain.
Yeah, it's really about, I mean, Cyprus, I have to say right away, is an innocent bystander here. It's merely the size of the economy that matches what we're trying to say. What we're trying to say is that these platforms are in polite political term, monopolies. They are so big today that they actually have more power than governments. You see that these companies have full lobby representation at the EU, in K Street in the US, and overall they react and operate as if they were a sovereign state in themselves. Of course, they own all of this data, which is very, very useful in terms of what goes on in the underlying economy. And we think that in 21 will be one of the major talking points that companies like Amazon, like Facebook and others will have to have some sort of a headwind coming from the fact that they will try to get away from. And make no mistake, some of these companies, including Amazon, has paid very little to zero tax over the last 10 years, despite the fact they created some of the richest owners of business in the world.
And you're saying it's time to potentially short some of these tech companies, even though they've been the absolute darlings of 2020. So you think 2021 is not going to be as friendly to tech?
I think tech will have a hard time in 21, and that goes back to your question on copper. So as explained before, the technology sector has the high duration, i.e. the highest rate sensitivity. And if you believe, as I do, and it seems Goldman as well, think that we're in a super cycle in commodity, the marginal cost of everything that is operated in the physical world will go up so much so that one of the surprises we may see in 21 is a central bank that first needs to go from dovish to neutral, and ultimately, if inflation becomes high enough, it will have to actually react. And if that happens, an interest rate in 10-year, for instance, break the first 100 basis point, but ultimately 150 basis point, which I, for the record, think is very likely, then the interest rate sensitivity companies like the technology sector will be very hard hit. So yeah, for me personally, I'm rotating into the physical world, the logistics, the mining companies, and companies that is part of this green transformation that is happening right now.
The other one on your list is Germany bails out France. You're saying France is going to need to be bailing out some of these French banks. Does that mean in 2021 you want to buy French banks before that happens?
Well, so remember again, it's outrageous course. It's not our main sort of core inflation in terms of it. But what we're saying is that if you look at the private debt in France at 140% of GDP, it is higher than both Greece and Italy. And as such, the banking sector, of course, is at risk because if the private debt is not repaid, the non-performing loans of these underlying banking businesses will have to be revisited. So the deal, I guess, here is that you're a bit skeptical going into the new year and you see this sort of deterioration in non-performing loans, and then you buy it on the fact that ultimately the banking sector of Europe is just one and the same. I mean, if the German banking sector wants to survive, they also have to have the French banking sector to operate. But the bigger theme here, of course, being that a country like France is one of the most severely hit by this slowdown that's been going on from the pandemic.
The final outrageous call you have I want to bring to the attention is China's new digital currency inspires tectonic shift in capital flows. And I find this interesting because it's short the U.S. dollar and overweight Chinese government bonds and equities versus the rest of the world. I find it interesting because it's obviously today we have dozens of companies, Reuters is reporting, are going to be added to the U.S. blacklist. So is this just a complete buy China call?
It's more a buy the lead in technology and buy the up and rising alternatives to the US dollar. So I think one of the main skeptical pushbacks that you have if you want to say that the dollar structure is going to weaken is, what am I going to buy? What is the real alternative? And we think, for our part, that a digital currency issued by the PBOC, which is very much in the pipeline, is a very credible alternative. The reason for that being that a country like China, who is still trying to control the capital outflow, they can actually achieve both controlling the capital outflow and allowing foreigners like you and me to invest widely and broadly into their economy if they have a digital currency. Because, of course, the facility of digital currencies that you have 100% control of where money goes and where money comes from. So we think the opening up is the bigger case here. As you are, I'm of course concerned about the increased tension between the US and China, but for our part, we also again think that the technology race is inevitable, and we think that the world ultimately will operate in two economic zones, one being the, let's call it the US Anglo-Saxon, Europe-driven one, and the other one is a China-driven one. And I have no doubt that in the China-driven Asian trade zone, that the digital currency of China will be the #1 currency to go to. And I think increasingly the investors in Asia will go and seek out return and deposit of liquidity in the Chinese market relatively to the one that you and I live in right now.